Do you guys remember 2019? What a year that was. I mean, you could buy into these dividend paying companies and expect the company to be repurchasing its own shares. And not only that, you could also expect your dividend income to keep climbing each and every year. It seemed like the economy was just great back then. Producing dividend investing videos was really easy because all I had to say to you guys was, well, here's some dividend companies to look at, here's some dividend paying ETFs to look at. You buy enough of these, and then one day you step away and you can be financially independent. And once you're financially independent, you can do kind of whatever you want, like the important things in life, like clean out your junk drawer. Finally determine whether or not Luigi was actually in Mario 64 or not. Start a reactionary YouTube channel to get tons of views and tons of money. Travel to that place you've always wanted to, and then realize you're homesick and want to come right back. And of course, if there's any spare time left over, spend it with your family, of course.
But then 2020 had to happen, didn't it? I mean, who saw that coming?
I mean, besides Bill Gates. We saw a tremendous amount of momentum at the beginning of 2020, but just as quickly as the momentum started, it came to a halt.
No! God, please, no! No!
That's why in this video, I want to discuss dividend cuts, dividend suspensions, the pause in shareholder buybacks. I want to discuss my reaction to this kind of news as an investor and what it means for you. It's why dividend investing is far from doomed. Lastly, I want to share with you how my dividends are doing and my dividend portfolio is doing under these current economic conditions. As we get into the content, I want to take a moment to thank you all for being here, especially all the new subscribers who have joined the channel. We've had several hundred new people join the community, so welcome. And if you're brand new here, we make videos around finances, investing, and taxes on this channel to help you build wealth. There are currently in 2020 over 500 companies who have decided to cut their dividends or suspend their dividends, halt their dividends, whatever it may be in 2020. I'm just going to let this scroll on screen. I'm going to link this down below so you guys can check this out if you want to see it. There's every single company I believe is listed here that has had one of those cuts. Now, just because a company, I want you guys to know that if they just stop producing the dividend at the moment, it doesn't mean it's necessarily a bad thing. It's just the management of that company has decided that the best course of action for the sustainability and long-term ability for that company to survive and thrive in the future is to hold cash. And it doesn't mean that, it's also not a sign that you should sell the company necessarily or that it's a bad investment. It's just the management believes that is the best course of action given the current economic conditions or given the recession. It's not uncommon at all to see things like this. Now, we're obviously in a very unique time period, but even back in the last recession during 2008, there were numerous companies who halted or cut or suspended their dividends. But later on, as the economy started to come out of that recession, then the payments were reinstated and the dividends started rolling back in, share prices went back up, and so on and so forth. So just know that a company is not good or bad necessarily just because they cut their dividend. I think the thing to really watch out for is if the business was performing poorly even before the recession hit. And I think that's a sign of danger for the company. But if the company is financially strong, their business model is strong, it's essential, it's working within these economic conditions, then I think you have a solid investment. And I don't personally think there's a reason to sell it. That's just my personal opinion. Obviously, you'll have to make come to your own conclusion on that, but for me, that's my point of view, and I'm currently not selling anything I own. I've researched the companies I have, and usually once I research them, I usually hold them for the long term because I buy not necessarily for quick capital appreciation, but really a lot of times I'm buying and investing for the purpose of cash flow. And if I believe that cash flow will be there on the other end of this, I'm more than happy to hold that position and dollar cost average in, which I'll discuss later in the video. Regardless of all of that, I know many of you are brand new to investing and you're just getting started in your investing journey. And I will say to you that there's a lot of valuable lessons you can learn during this time period that many generations didn't even get to see. And there might be a lot of opportunities coming out of this. Right now, we've already seen several companies either scale back, reduce, or completely pause their dividends altogether. Some companies have decided just to suspend shareholder buybacks, while other companies have stopped paying dividends out at the moment. We can start to see which companies are viewed as essential during times like these and which ones aren't as essential. Clearly, one industry or one sector of the economy that's cut their dividends or scaled back their dividends significantly is the oil industry. Oil is at all-time lows, and we've never seen anything like this within the oil business. And you combine that with all this other stuff with the Tom Hanks disease, and that just makes the whole thing a lot worse. Cruise lines have been decimated as share prices are at nearly all-time lows. I think very close to all-time lows. The airline industry is a whole nother story. I'm not even gonna get into it. And there's all sorts of restaurants that have been hit and impacted and things we just never saw coming. It's easy to get scared as an investor of not wanting to participate in this further, but I can tell you that it's not all bad news. You can see here from a list, there's still, even right now, even today, when I'm filming this, today is May 9th, or the week of May 9th, and there's a tremendous amount of companies, despite all of this, that are still increasing their dividend payout. You might be surprised, but it's not all bad news. We saw there's several utility companies that have increased their dividend payouts, one of which I own, American Water Works. We saw Procter & Gamble come through with a nice 6% dividend increase. PepsiCo has increased their dividend 7%. And some of these other companies that, well, I guess, I don't know if you call them more essential or not, but just because of the circumstances we're in, are flourishing. They're absolutely crushing it during these hard times.
Dominating!
As an investor, especially if you're new to investing, I think the thing to take away from this is that not all companies are created equal. And we can see that some of the more boring companies are actually more sustainable during hard economic times. A lot of these companies who may have already suspended their dividend, cut their dividend, whatever it may be, it's not the end of the road for them. As long as they can survive financially, I think that is what's most important. One company that it just is like a punch in the gut, I'll be honest with you guys, was EPR. And you guys know I own EPR, which owns several different kinds of entertainment properties. They recently decided after May, after this month, they're gonna suspend their dividend going forward until times turn around. And honestly, as an investor, I respect that. I don't live off that income. I don't need the income right now. And what I want to see is I want to make sure my principal is protected. And I view that as a sign of good management. I want companies that are going to manage my money, that I invest in them well, and even if it means not paying me as much right now or not paying me anything right now, because I want the company to survive and I want my investment to survive. There really isn't a perfect investment. Not even dividend investing is perfect because they're susceptible to pauses, suspensions, and dividend cuts or reductions. Real estate, same way. I mean, you can be a landowner or a landlord and your tenants might not be able to pay the rent, which is very true for many landlords right at this moment in time. So there's no perfect investment, but I think what these times really highlight is the importance of being well-rounded financially in terms of how you're positioned. Do you have an emergency fund in place? Is your debt going down or is it going up? Do you have cash to the side? Do you have other investments or other hedges to protect you like gold and silver, inverse ETFs, long-term bonds, things like that? What other things out there do you have that can help keep you afloat during these hard times? And when it comes to dividend investing, guys, I don't want to own one or two companies that pay me income. To me, that's too risky. And I think it really shows how important diversification is. Whereas right now we have some companies which are biting the dust, right? And other companies which are flourishing. And so if you have a proper diversification, you can, even if one company or even a couple companies stop paying you income on a regular basis, you'll be okay. It won't create a financial hardship for you because you've set yourself up well financially. And if you do that, I don't think you're gonna lose or you're gonna be better off than 90% of the population. Now, whether or not you own individual company stocks or dividend paying ETFs, either way, you're still susceptible. You might be more diversified with an ETF because it's got a lot of built-in diversification in it, but it doesn't mean that it won't ever take a haircut. We can just take a quick look at Vanguard's Dividend Appreciation Fund, and we can quickly see that in March already, they've already scaled back their dividend sum. The same thing is true with a high dividend paying yield fund at Vanguard, VYM, same thing. You can see they've already lowered their dividend in the first quarter of March of this year. This is my 7th year of consecutively investing in the markets. Now, most of my investments are in income producing investments that pay me dividends monthly, quarterly, or annually. That's where I like to invest the bulk of my money because I love investing for cash flow. I pulled this data as of May 8th of 2020, and what I did is I went back to my dividend history spreadsheet, and I love to do this, guys, and I encourage you to do this as well, is I keep a history of every dividend payout I've ever received over the last 3 years. And so I was able to compare all of the dividends in 2019 through May 8th, and I've compared it now to all the dividend income I've made so far through May 8th of 2020, and guess what? I'm actually ahead of the game. So I've just as of May 8th, even though some of my companies will be scaling back their dividends, most of mine haven't been affected, by the way, I still have made over $800 more so far compared to last time at this, or compared to this point in time when comparing it to last year. So far, things are hunky-dory. Now, I do expect if this economic hardship the economy is currently facing drags on, I do expect my dividend income not to be what I projected. I expected going into this year that I might make around $6,000 or so in dividend income. I don't know if we're gonna hit that now because of the current circumstances, but we'll just have to wait and see. I'm gonna keep investing monthly. I love dollar cost averaging. I absolutely love it. And I'm being able to buy the companies I love at cheaper prices. I hope you guys can see from this short video that it's not all bad news bears. I know that's what you're seeing on the news, but that isn't the case for everyone. And there's a lot of investments out there that no matter what kind of economic circumstance we're in, will flourish. And you just have to know where to look and understand what's going on in the economy and where the demand is. Follow the demand of the consumer, and you'll typically find the companies that are flush with cash who can continue to pay dividends to you even in the hardest of times. I hope you guys enjoyed this video, and I hopefully it brought you some encouragement to continue investing, not worry about it, but more so to understand how important it is to get yourself set up financially, and so that you can always be able to pay your bills regardless of the circumstances, always have some cash in the bank, have an emergency fund, have your debt paid down so that even if your income gets cut a little bit in the future, it's not going to take you out. And then when when things are cheap, that's when you come back in and you build even more wealth as it comes back up, whenever that may be. Guys, enjoyed today's video. If you could do me a favor and drop a like on it, I would really appreciate it. And the best thing you can do really is to support the channel, subscribe to the channel if you have not done so already, and share this video with others. There's a lot of people I think would benefit from hearing this information and seeing it from a different perspective than what the mainstream media is currently shoving down their throats. I love y'all, guys. Live life uncaged. Have a great week, and I'll see you in the next video. Thank you for the continued support. Peace.